Welcome to Wealthy Experts, where we interview experts in their field so we can learn all the best ways, tools, and tips that they use to build a wealthy life. I hope you enjoy the episode. Welcome, everybody, to another Wealthy podcast. And today I have Michelle Ciesielski from Knight Frank. She is the head of residential research. And I'm a big fan of hers. I've been watching and following her on LinkedIn. So if you're not already, add her on LinkedIn. She has just recently pushed out a Knight Frank wealth report, and there's a wealth of knowledge in there that we've been able to sort of unpack. But today we're actually going to be talking about a wide set of topics. Michelle, thank you for jumping on the show today.
Thank you so much for having me on. It's taken a little while for us to connect and get this. We're both on the same page at the same time to make this happen. But thank you so much for inviting me along. Much
appreciated. Now, I'd love to just sort of jump straight in and ask you about 2022. I mean, you're very fortunate to be sitting at the table and having so many different research analysts around you from a global stage and just different parts of the market. What are the key themes or trends that you're paying attention to for 2022? And can I just understand a little bit why and what you anticipate happening?
Yeah, absolutely. Look, we can't really talk about 2022 unless we talk about what's happened, I guess, over the past 2 years. And I guess it's quite interesting being here in Australia that, we have seen wealth creation happen through a global pandemic. And it's not only happened here in Australia, but it's also happened around the world. When we sort of started to head into this pandemic in 2020, Australia certainly handled the response quite differently to others around the world. And as a result, we did see our mainstream market. So when we're talking about, the residential market here at Knight Frank, the mainstream market is, your everyday market. We did see that, pause and, investors and owners take stock of where we were. There was so much uncertainty as we were, month by month, coming into the second half of 2020. But what we saw through that time was so much wealth essentially being accumulated. So we sort of saw that savings effect in 2020. And then what we saw in 2021 was people thinking, wow, I haven't traveled. I have got a little bit more money in the bank than what I normally would. And it was about what do I do with that money? We saw, the rise of the technology space. We saw people consider and certainly invest into, cryptocurrencies. But at the end of the day, Australians really do like to have a property that they own of their own, but then also, aspire, I guess, to have an investment portfolio. So when we look at like wealth being generated at the top echelon, when we look at wealth here at Knight Frank, we tend to, we're talking about the ultra wealthy population that have more than 30 million US, including their home. So it's really, we're talking about the top echelon of our population in terms of wealth. And I guess the reason why we really like to understand this population is that I guess the level of wealth and this wealthy population, they have a huge influence on what happens in our markets. And so I guess they tend to, in some ways, take risks where others may not. And we can, I guess, as in the mainstream market, understand, I guess, where the market's going. Did it work for them? And then I guess, we tend to follow suit. It's quite an interesting, leadership that they take, whether they are in their own business or what have you, but they tend to then lead the market with some of the opportunities that can come through for the mainstream market. So I guess taking this all together, this wealth conversation, property, whether it was residential, I guess, even to some extent commercial, but without a doubt, residential property was the hero over the past 12 months. And when we're talking about that ultra wealthy population, we really started to see not only the prime market, which we consider to be the top 5% perform really well, but the top 1%. So that super prime space was just off the charts. So it was very evident with that ultra wealthy population not necessarily travelling around the world. They were here in Australia on home soil, and they reinvested their money. And we just saw, more wealth being created as a result. We saw the stock market perform reasonably well in 2021. We saw, other, business ventures take off. And as a result, the property market followed suit.
So, if I'm hearing you correctly, it sounds like the property market has early movers or first movers are the ultra high net worths. It is the ultra wealthy that sort of move the fastest. They've got more information that they're available to them. We saw them fly to quality, to their own homes, investing back at home and to having these beautiful homes and to use the additional cash back here. And then there was a flow-on effect where we saw a lot of other Australians doing the same thing. We had clients that came as a result of that. They had deposits that they were going to go and use in Europe that they ended up saving and buying houses and making hundreds of thousands of dollars on their original investment. So that was one of the key themes that I saw as well. Now, going into 2022, do you anticipate much of a change, or do you think it's going to be more of the same? Like, do you anticipate that 20-30% growth, or are there headwinds that are pushing this market in another direction?
Yeah, look, there's certainly, a huge amount of factors to consider for 2022. The fact that our borders have reopened has just opened up the world again to Australians to travel, but also to invest. We have a situation where not only is the world open to us, but Australia's now open to others to come to Australia, to live, to work, to holiday. It's quite, an interesting scenario that when we did see, at the start of the pandemic, we saw, vacancies rise quite significantly in our two major capital cities, being mostly in Melbourne and then in Sydney. But we've really seen those vacancies taper back. So if we just look at, that international population coming to Australia with the fact that they do have this opportunity, and I don't think that this will probably play out until, the later months of this year. But we're in a situation where our vacancy, in terms of an average across the country, is now trending below 3%. And when we sort of hit that 3% mark is when we start talking about our markets being undersupplied. So we could easily say that for basically every capital city except for Melbourne right now is trending below, well, and in some cases well below 3%. So to think when we do have international people come to the country, and whether that is just for working or it is to migrate here, one of the first things they tend to do is rent a property. So that's something that we really need to consider in 2022, is that we haven't really seen the investors invest in the market that we've seen in the past. So we're in a situation where not only are rents rising quite rapidly, it's likely that they're going to rise even further towards the end of the year, because I guess we're a relatively young country, and we need a lot of, new supply to come into our markets to absorb that population growth. And we just haven't seen it. We've seen, don't get me wrong, a lot of house and land packages. We've had a lot of stimulus around that space through the pandemic, but they tend to be geared towards owner occupiers. And it was, more of an incentive for people to, we're in lockdown, it's time to reevaluate your life. And we've seen a lot of people make decisions that have been brought forward and possibly would not have been able to achieve for, a few years down the track. So I guess I'm talking more around the apartment space. And when we do have international people, moving to Australia, they tend to look to the cities first, because that's where the employment is. And also they're used to living in high rise, where in most of our cities, I guess Melbourne's somewhat an exception, but we don't have a lot of high rise in our cities. So the fact that we're not actually building a lot, we've got a lot of, red tape around planning for some of our cities, but we're just not seeing enough new apartments being built to absorb this rise in demand that's going to come. in the next few months. So that's something that we really need to be mindful of, and I think that's almost the crux of the property market, so to speak. We know that there's certainly been people that have been priced out of the market once again. There was an opportunity there that there were in our major capital cities that there was some opportunities there. But really, some of those have expired, and we know that people that are living in Sydney and Melbourne and Canberra are now sort of looking at, that I want to own a piece of land, or I want to own just some property, and it's that whole conversation about, possibly buying somewhere else, but continue living in the same situation that they're living in now. So, that I think that's almost, we need to keep our eye on that in 2022, because that's certainly going to be changing as the year goes on. You touched on interest rates, and interest rates are one that it's a funny situation that we're at, an all-time historic low for interest rates, and we're talking about perhaps a 25 basis point increase. We're still going to be at an all-time, low, essentially, environment. So I guess the interest rate conversation talks to, sentiment and people feeling confident about investing into the market. But we've got some other headwinds that we need to contend with this year. We've got a federal election coming up, by the end of the financial year. That's something that we almost see a lot of people sitting on their hands until they are comfortable that that we have gone through that election period. So we have not only got somewhat the uncertainty of the pandemic behind us. There's still maybe more variants, and we're not across that yet. But there's still some other headwinds that we need to be mindful of. So that economic rebound that we saw last year certainly won't be matched this year. But there's still opportunity for our markets to grow further by the end of this year.
You touched on so many interesting points there. So I'd like to just unpack a couple of them. One, you said, well, obviously the borders are starting to open up. Tourists are coming back, students and migrants. Now, currently across the country, we're basically at 3% or less as far as a vacancy rate. And that means that basically the market is undersupplied. Now, part of that as well, we've been paying attention to the supply coming to the market. And after the last boom, and then also the pandemic, we noticed that approval ratings were down very low for apartments, whereas houses was different. And you said that earlier, it was mostly led by homeowners, owner-occupiers, first home buyers, government grants that pushed housing approvals up. But apartment market, there's really a big lag between buying a site approval and then it being completed. So the fact that we've got this pool of people coming in looking to rent in these markets, but then also buy, but then there's an undersupply of the amount coming in, it does feel like that part of the market may move faster than some of the other parts of the market. And the other thing, I guess, adding to that, which you've touched on, is interest rates, where people in their own backyard can't afford to buy a house anymore. So they're going to look to do one of two things. I always say to you, the density or distance, move further away from where they are today, or get something a little bit smaller that they can actually go and afford. So it's interesting that there are some headwinds, but then there are also some tailwinds depending on what part of the market you're looking.
For sure. And it depends what city you're in. It's really hard to talk about Australia. Obviously we work in a global team, and there's so many times they're like, oh, how's it going in Australia? And it's like, okay, what part of Australia? And even within that part, which sub part of that do you want to talk about? But you're right. I think a lot of the new supply conversation can come back to, I guess, a government conversation around planning and allowing more development to happen. And those conversations are always going to be endless. How long's a piece of string for a lot of these areas, a lot of redeveloped areas, a lot of new areas. But it really does come down to the developer. Like, the developer needs to be in a position where they can, one, buy the site, but two, be able to I guess, make it worth their while. And that's the situation we're in right now, is that sites are quite hard to come by that are well positioned, And we're talking about developers that are, I guess, catering for that huge surge in demand around luxury and the, I guess, the downsizer. We call them right sizes here at Knight Frank, where they're looking for large apartments that almost replicate their home just without all the maintenance and the yard and the tennis court and, you know, so forth. And developers are looking at that product, but very hard to find sites to necessarily deliver on that. But then at the other end, you've got, as you mentioned, those that are currently struggling to get into the market. And, you know, that's quite concerning in Australia, given that we currently have the lowest, you know, interest rates. Finance is so incredibly cheap and has been. It's certainly, you know, trending towards becoming more, I guess, expensive. But at the same time, you know, finance is, it's never been lower. So, sorry, the cost of finance has never been lower. So that like those two, for a developer to cater at both ends of the market, they've not only, I guess, trying to grapple with site, you know, purchasing the right site. We've now got not only pandemic induced, but even prior to the pandemic, you know, a skill shortage, you know, material shortage, construction costs that are absolutely through the roof. You've got people who aren't necessarily, you know, I guess, not planning to move, but through this lockdown period have gone, you know what, I think we might extend the back of the house. We might, you know, move that garden to be more of a lifestyle, resort style, outdoor area. And to get people to come in and do that is incredibly tricky because we just don't have enough skilled people in that space. And obviously developers are, you know, grappling with that issue as well. So there's so much hinging on developers developing a product that's not only suitable for the market and meeting the demand, but I guess doing it in a way that is going to meet this demand in the coming years, because we know that development site sales have dwindled since 2017. From a 2021, it was actually better than 2020, but still nowhere near, you know, the long-term average in terms of site sales that have been purchased by developers. So, you know, we're back at a situation where we need the developers to build, and right now it's not a great environment for them to be building in, even though we know that there's the demand sitting there for, you know, luxury house-sized apartments, but also, as you said, you know, smaller apartments where people can get into the market in our major cities.
And, you know, that's really interesting. You've touched on, again, so many key points. I mean, building costs are going up from a number of different things, supply chains, you know, obviously then there's inflation, then there's just competition on materials and also tradespeople. And as you were saying earlier, people had savings. So they're either buying a new investment or working on their own home or just using that money effectively. Now, we've been talking about the major metro hubs, been talking about the cities. One of the big things that I've been paying attention to, and we predicted this as well, that with the advent of, well, not the advent, but with COVID hitting, people would move to regional centers, tree change, sea change, getting out of CBDs. With the advent of home offices and people being able to work remotely, we could see that actually happened. Regional markets jumped in value. Is this something that is systemic? Do you think it's going to change, or do you think it will normalize? Will people stay in regional centers? Will they come back to CBDs? Will there be more people moving out? Like, is this just the beginning? Were there people like me first movers and there's more to come?
Yeah, look, it's a very interesting conversation. I think this was already on people's minds prior to the pandemic because they were being priced out of the cities. And I guess more than ever through the pandemic, we've seen a rise in, I guess, you know, technology being rolled out quicker than what, you know, was once anticipated by the company, or, you know, a new entrepreneur has come up with an idea that's just made things even that bit quicker or easier to do from a regional area. So I think that shift was already happening, but I guess from an employer point of view, it wasn't the employer wasn't necessarily meeting the employee in that conversation. So I guess, if anything, COVID and through the lockdown and encouraging people to work from home, I know even today in Sydney, I heard on the radio on the way in, just because of the extensive flooding that's happening, if you can work from home today, do that. Like I wouldn't have expected that to happen, 2 or 3 years ago out on the radio. But we've now become accustomed to that because we've had that, that trial, and quite an extensive trial of working from home. So I guess from an employer point of view, they do have, the confidence for their employers to work remotely. In saying that, it really depends on the industry that you're in. And we were sort of talking about this earlier, that there's ideal situations where, there's a skill shortage, we're unable to get the right people to fill the jobs. If it means that, someone is living away from the city and they're able to come into the city, a day every fortnight or a day a month, just to touch base with the team and do those face-to-face meetings that are super important. I think that's employers have had to accommodate that. But even where we work at Knight Frank, we're quite a wide range. We've got quite a few different services. I'm always writing reports or putting together presentations. I love my quiet time to do that. So, that works well for me working from home. But then there's other times when presenting to our clients and being face-to-face in meetings, it can go so much further as well. So I think it really does come back to the job that you're in. But then there's people that have now experienced that and love, the country or coastal lifestyle that it offers. So I think it really is, it's almost like a piecemeal conversation. It's not necessarily about those that are semi-retired doing this. It's a much younger crowd, let's say. But I guess the real test will be when people go to get their next job. That will be when people go, wow, actually, I don't have as many options, perhaps, in this coastal town than I had if I was in the CBD. Quite interestingly, I've seen on a few different job search ads how they're actually stating whether you're going, if this job is desired to be in the office or it's encouraged to be remote. So I think that there'll be businesses that benefit from having people remotely working and happy employees that they can do the the country living plus sit into a conversation that's on a global call. It really does come down to that the flexibility that the workplace offers, and that. I guess that's almost the starting point, but it's then looking at from a residential point of view, making our homes accommodate those that are working from home. I think that, once you've made that decision, it's not a matter of, working from the kitchen table. You need to have a nice setup. You need to have, the chair positioned correctly. It's not sitting on a stool at the bench where people may have done temporarily over the lockdown period. So, it's about making sure that our homes equip those people that are planning to do that. So I guess when we're looking at the wealthier population, and by all means, it's certainly happening in the mainstream market as well. We do have people that are, doing the whole co-primary situation as well, where they may have a country home or a coastal home that they're actually enjoying as a holiday home. It used to be the holiday home that they would, maybe go on the weekend, every couple of weekends, that, they'd be down there. But it's now really about, spending 50-50% of the time in both places. It's funny, like I sort of say, having a toothbrush in both places, because it means that, you're really, moving quite easily between the two homes. But, we do know that our, ultra wealthy clients are looking at having a coastal home, a country home, but also having somewhere in the city, so that when they do come up for their meetings or, whatever business that they're undertaking, that it's an easy process. It's not checking into the hotel and making sure that, we've got to get car parking and all this kind of business. It's really about having a place for them to, a city pad essentially to do their business while they're here. So I think that that it's a really hard question, because it really depends on people's situations. But if more than anything, I know, talking to our office leasing team, there's people still looking for more office space than what they have prior to the pandemic. So it just really depends on what business you're working in.
So it sounds like it's too early to tell whether this is going to be a big systemic change, but based on what you've experienced around the office and from people that you're working with, as you said earlier, the ultra high net worths and people that have got a bit more money, they are looking at this as a systemic change. They are looking at having dual homes, the crash pad in the city, but then also something that's a bit more tranquil. But in the same breath, you are saying that there's still a lot of businesses looking for places for lease, and the cities are still filling up. So I guess that the jury's out on this one. We'll have to check back in another 6 or 12 months and see.
I know, like I'm in the office today, and like I was saying to you earlier, we've got 60 people that have come together for a morning tea here this morning, and it's we're not that's not full strength, but we know that we've got the technology that people that were working from home heard the same message, and coming together. Those people that are regulars in the office thrive off the conversation at the water cooler, in the kitchen, just hearing snippets of information. Like, even as a researcher, overhearing conversations where I can go, hey, what were you just, what, blah, 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 talking about auctions or something, and then we can start, a conversation. I wouldn't have heard that if I was at home. So there's so much that can be gained from being in the office. Don't get me wrong. But at the same time, I think that we do need to have our homes that are suitable to have more work activity being done from them.
So, that's one of the bigger themes. And I'd like to sort of shift gears just a little bit. I'm conscious of time as well, because you're a busy lady. Do you feel comfortable commenting on the current unrest in Europe and what you anticipate will happen on the real estate markets here in Australia, if any? Obviously, war and civil unrest is a very sensitive topic to a lot of people, and I'd hate to distill it down to economics and what impact this will have in Australia. But these are things that people are thinking about. Have you got some comments on that?
Yeah, look, I don't have too many comments on that, given it's quite early on, and we certainly pay our respects to those people that are being displaced because of what's going on in Europe. I guess looking at the Australian property market, we don't see a huge amount of investment from that part of Europe. If anything, even Europe itself, we don't see a huge amount of investment here in Australia. So when we, in terms of buyers, we primarily see our buyers from Asia, and we are actually seeing an uptick in inquiries and also those that are purchasing here in Australia. So when we basically, essentially closed our borders, we still saw in those first couple of months through the pandemic, there was a really favourable currency play. And so we did see a lot of Asian investors look to Australia in that time, just because that currency was to an advantage. But since that time, the currency hasn't been hugely favourable to buy residential property here. And obviously our prices have escalated as well through that time. So overall, international investment has been quite slim in Australia over the past 2 years. But as our borders reopen, as I said, I think that we'll start to see more Asia interest in Australian properties, and that will certainly, as we know, any international investor must be a resident here to buy an established home. So if they are buying the new apartments, then they're actually adding to our rental stock. So that will be certainly welcomed in many of our capital cities, just purely because we haven't had enough in that rental pool of late.
And have you heard any rumors of government potentially looking at, making it easier for investors or international investors to come back? Because we had that run in 2018. And soon after, we created the tax or stamp duty was much more expensive for those purchases. And the tap basically turned off overnight. There were no more much less international investors. Are there any rumors that the government may be looking at making it easier for international investors to buy back in Australia or buy in Australia?
Yeah, look, it's almost it's a state by state conversation for sure. Without a doubt, adding those foreign investor fees did have an impact in the I guess the cities where those state decisions were made. We do have an overarching, investor fee that's at a federal level. I haven't heard anything around that. But if we are in a situation where we need to encourage more foreign investment into Australia, that would certainly, there's space in those fees and also the surcharges that could be amended to entice more people to invest here.
Okay. Michelle, thank you very much for your time today. Have
you.
you got any other parting words of wisdom for us before you go? I can see the room's already going dark for us.
I know. It's almost like I've just said, I'm packing up shop. I'm turning the lights off. No, this is the beauty of having sustainable buildings that when I'm not moving enough, the lights like to go out. Any parting words? Look, I guess we're in a situation where we've seen a lot of wealth being accumulated, whether it be at the very top end or also just in our our mum and dads have certainly accumulated a lot of wealth as well over the past couple of years. And it's just about, I guess, over this year and certainly next year as well as to how they spend that. We know that people are starting to go on their holidays again. We know that, from a first home buyer situation, if you didn't get into the market, and do you keep saving to try and get on the ladder and maybe look to another city or, as you say, further out? Or do you, perhaps go for that holiday that you have been, wanting to do to recharge the batteries? I think the market itself, I think, is becoming a little tired, as people are as well. So I think that we will see, some slowdown just purely because of the energies coming out. But look, until the other side of the federal election, I really can't see too much change to our market. I think that there's still people that are looking for the right property, but at the same time, we've also got some uncertainty that people are uneasy to make that commitment at this point in time. So I think looking to the second half of the year, I think we'll still see growth in all of our cities this year, but we certainly won't see that rebound growth that we've seen over the past year.
Okay. Thank you again. It's been great talking to you. Thank you for all your work and the research that you're putting out. I look forward to sinking my teeth into the Wealth Report. It's a dense document with lots and lots of really helpful pieces of information. So anyone out there, go to Knight Frank, download that Wealth Report, and keep on listening, subscribe, send it to all your friends, and have a great day.
Thank you so much.